Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this particular video, we are going to be diving into the RSI Momentum Strategy. Okay, it's quite an effective strategy for identifying strong market trends. Okay, if you have been trading for a while, you know how important it is to catch trends early. And the RSI Momentum Strategy can help you do just that. Okay, whether you are a beginner or an experienced trader, this strategy can give you the edge you need. All right, so let us jump into it. I'm going to be adding the RSI indicator to the chart as we explain this momentum strategy. Okay, the RSI is a momentum oscillator that measures the speed and change of price movements. And as you can see, it ranges from 0 to 100 and helps traders identify whether an asset is overbought or oversold. Typically, an RSI value above 70 signals that the market is overbought, and below 30 signals that the market is oversold. Okay, but here's the thing. While these levels are helpful, the RSI also reveals a lot about market momentum. It shows us whether the price movement is strong or weak. This is where the RSI momentum strategy comes in, and we are going to take a closer look at how to use it effectively. Okay, so the RSI momentum strategy is all about using the RSI to measure the strength of a market trend. Okay, unlike traditional uses of the RSI, which focus on identifying overbought and oversold levels, this strategy particularly uses the RSI to gauge the momentum behind price action. It helps you to spot trends and decide whether the market is likely to continue moving in the same direction or if it is about to reverse. Essentially, we are using the RSI as an indicator to tell us how strong the current market momentum is. For example, we can see that in this scenario, I want to look for a strong trending market. Okay, I want to look for a strong trending market to use as an example. Okay, we can see that in this example, we had the market trending upward, right? We can see that the RSI indicated a strong bullish trend as it was consistently trending upwards as well. Can you see? Can you see that the RSI was not making some sideways movement, unlike what we have here? Can you see? You can see that for yourself, right? You can see that on some cases, you will find the RSI making sideways movement, but you can see how this RSI value are going consistently up, indicating a strong bullish momentum. This is what we call a strong bullish momentum. Can you see that all the way up to this place, the price kept on going higher and higher in a very narrow channel, right? Can you see, in a narrow channel? So there was not a lot of price swings within the channel, unlike some cases where you see some price swings. You see price jump up like this and then jump down and then jump up like this, and all of that. But in this situation, we had a narrow channel and price was consistently trending upwards. So the RSI followed suit, trending consistently upwards, showing strong momentum. Okay, now that we know what RSI momentum strategy is, let's talk about how to set it up on your trading platform. Now, most platforms like the MetaTrader or TradingView allow you to add RSI indicator directly to your chart. The default setting for the RSI is usually 14 period, as we can see, which works well for most traders. However, depending on your trading style and the time frame you are using, you may want to adjust the period. For example, shorter periods like 7 or 9, right? It can make the RSI more sensitive to price movements, while longer periods can smooth out the readings. For example, if we try period 7, you can see it makes it more sensitive. So if you are a shorter term trader, you might want to try out period 7 or period 9. If you're an intraday trader, you can actually go ahead with the default settings of 14. But if you prefer a very long term, situation, you can actually try out periods like 20, 21. Perhaps if you are a swing trader that trades or hold positions perhaps for days, like many days, perhaps for weeks. Let me not say days, let's say for weeks or perhaps even months, right? So you might want to try out a higher period. Okay, but if you just do, you know, the usual swing trading of perhaps holding trades for a couple of days or maybe like a week or two, then the default settings is still fine. All right, default settings is still fine. And then once the RSI has been added to your chart, the next step is to watch for momentum shifts. Okay, a key part of this strategy is to look for the RSI to move above certain levels, and for that purpose we are going to be adding a 50 level to the chart, to the indicator. We're going to add a 50 level. Okay, now whenever you have the RSI above the 50 level, typically it indicates bullish momentum when the RSI is above the 50 level. All right, on the other hand, when the RSI is below the 50 level, it indicates bearish momentum. Okay, so supposing you are looking at a chart, right? Let's go back to that our example. Supposing you are looking at a chart and you know you find out that the RSI has crossed above the 50 level and is kind of bouncing off the 50 level, you will notice that there is strong bullish momentum in the market. On the other hand, if it is a sell momentum, you notice that price is actually trading under the 50 level. You will notice that there is strong bearish momentum in the market. All right, now another important aspect of this strategy is the speed of the RSI's movement. If the RSI moves sharply above or below the 50 level, it suggests that the momentum is particularly strong, like what we saw here. This was a very strong momentum. You can see how sharply the RSI dropped. So it showed a really, really strong momentum. Now, while the RSI momentum strategy is powerful on its own, combining it with other indicators can give you more confirmation and improve your trade entries. A common combination is using the RSI with moving averages like, you know, for example, the 50 period moving average. Okay, the 50 period moving average. You know, basically when the RSI gives you a sell signal showing sell momentum and you have price drop below the moving average, it's a confirmation. On the other hand, when you have RSI giving you a buy momentum and you have price rise above the moving average, is also a confirmation. Okay, confirmation for a buy in this case, confirmation for a sell in this case. All right, now let's take a moment to talk about risk management. The RSI momentum strategy, like any other trading strategy, is not foolproof. There will be times when the market doesn't follow through, okay? And you'll need to manage your risk effectively. One of the best ways to protect yourself is by using stop loss orders, right? For example, if you enter a long position, right? If you enter a long position when the RSI is above 50, you could place your stop loss below the current swing low. Let's say you entered around here. You can actually set your stop loss below this swing low, right? So that you can be able to protect your capital in case of if, you know, the trade goes against you. Okay, it helps to limit your losses if the momentum doesn't play out as expected. Additionally, always make sure to only use a small percentage of your capital when entering a trade, right? Only risk a small percentage of your total account balance on each trade, usually around 1 to 2%. All right, by managing your risk and using proper stop loss levels, you'll be able to protect your capital and keep your trading strategy in play over the long term. Okay, and there are some situations when the RSI momentum strategy might not be the best strategy. Okay, for example, during a range bound or sideways market. All right, like what we have here. When you have a range bound market, I'm just going to recommend not to use the RSI momentum strategy. Okay, right? Because the RSI can become choppy, like what we have here, and it can be hard to gauge. So in these conditions, using the RSI momentum strategy might lead to false signals. All right, it's also important to be cautious during high volatility news events or periods of market uncertainty. These times can cause sudden price movements that may not reflect true market momentum, and relying on the RSI during such events might give misleading signals. Okay, so take note of that. To sum it up, the RSI momentum strategy is a fantastic strategy for identifying the strength of market trends. By watching how the RSI behaves and combining it with other indicators, you can get a clearer picture of where the market is heading. Just remember, like with all strategies, risk management is key to long-term success. If you found this video helpful, make sure to hit the like button and subscribe for more trading tips and strategies. Thank you for watching, and I'll see you in the next video.